I'm Taylor Riggs in San Francisco in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, a jobs stunner. The November jobs report surprises Wall Street, showing 266,000 new jobs. It is the biggest since January. We'll find out where tech jobs fit into that. Plus, Huawei versus the U.S. We hear from Huawei's chief security officer following the Chinese tech giant's decision to sue the FCC. And ride-hailing report card. Uber reveals its first ever safety report detailing thousands of sexual assaults. Shares drop on the news. But first, to our top story. It is a big jobs day to close out the decade. The U.S. economy added 266,000 jobs, the biggest since January, trouncing the 180,000 predicted. And according to CompTIA, tech jobs grew with more than 15,000 new workers joining the ranks. Joining us from New York to discuss the numbers, it is Upwork's chief economist, Adam Ozimek. Adam, I have to ask you, such a big day when we take a look sort of at a broad scale. Where did tech fit in for you today?
So tech's definitely a sector of the economy that continues to grow and continues to outpace overall job growth. So whatever stories are in the headlines, individual companies and concerns, at the end of the day, this is a sector that's adding jobs, and it's adding jobs more quickly than the rest of the economy.
Wage pressure is also something we've been talking about. We're finally starting to see a little bit of that wage growth as well. Are tech jobs following in that suit?
Wage growth is really broad-based, so you see it across industries. You see it in high-skilled industries, you see it in low-skilled industries, and actually it's been stronger for low-skilled workers lately as the labor market slack gets lower and lower. Those are the workers who are really starting to benefit now.
Adam, as you take a look across the tech sector, what industries and sectors are winning?
So I think information is doing good, telecommunications, you see a pretty broad-based improvement in tech in general. Data processing, it's hard to say that it's one sector versus another. It's really occurring across the board. So I think it's pretty broad-based improvement.
Any laggards in the tech sector this month?
Not this month, no.
So talk to me, I want to do a little bit more about that labor skills gap. In the broader economy, we talk a lot about the mismatch between jobs that are needed and then the skills that people either have or don't have to match up those jobs. Where are we in tech in that labor skills gap?
I think that it's not that there aren't workers available. There are still workers available, so it's not a mismatch in who is out there able to do this work. It's where they are, I think, is the bigger problem. And what you have is in crowded, expensive cities, it's harder to find workers, but there are still parts of the country where there are tech workers available to hire. And as a result, I think companies are increasingly finding it in their interest to try to hire workers remote in any way that they can and try to connect between the places where the jobs are and where the workers are.
Do you have any sense regionally where that is? I'm located, of course, in San Francisco, where people talk a lot about needing more workers and they can't find them. Where are other cities where there are labor available?
So if you look in Rust Belt cities, if you look in cities that are smaller than your big major metropolitan areas, I think that you can still find workers there. Lower cost of living places are other areas where you can find workers. And you have college graduates coming out of the pipeline every year that bring more supply in these places. And they're leaving those places because there isn't enough work there for them. So it's definitely not a matter of not having people to hire. It's a matter of working harder to find those people and going to where they are.
How cyclical is tech hiring? Today, of course, any odds of a recession seem to be forecasted later on in the future. When the economy does well, does tech outperform? And when the economy does poor, does tech see some under hiring? Or can you say that tech starts to feel a little bit defensive or economic agnostic?
So what makes tech interesting is you don't really have as many business cycles to look across to see how the modern tech industry does. And certainly during the tech bubble, you had a huge run up and a decline. And it's really only been recently that we've started to reach those employment level peaks when you're focusing on the tech sector. So I think that cyclicality matters. It matters for basically every industry, but tech is sort of its own thing as well.
I have to ask, Adam, where are the female jobs?
They're throughout the tech industry as well. I think every industry is working hard to find more people, and they're going to have to hire men and women as well.
Adam Ozimek of Upwork, thank you for joining us.
Thanks for having me.
Now, switching gears to the realm of video conferencing, Zoom Video was one of the celebrated tech IPOs of 2019, one that went up, way up, but after a strong third quarter and Zoom raising its full year revenue outlook, the stock has been tumbling. It's down nearly 10% in the last 2 days. To tell us what is going on in New York, it's Bloomberg's Cameron Leach. I have to ask Cameron, solid earnings, good guidance. So what happened with the stock?
I mean, Taylor, let's be honest here. The magnitude of Zoom Video's third quarter earnings, it seemed to be pretty big, but obviously Wall Street was not prepared for just the magnitude of which it was based on the prior quarter. One thing that the market and the analysts really discuss is you can just tell that this is what have you done for me lately type of industry. And one thing that investors really want to see is continued growth, especially as it seems that we might be coming to a recession as well.
Did it seem like expectations, frankly, coming into this were just so high that nothing was going to satisfy analysts?
You know, that's the sad thing about it for a company such as that's good as Zoom Video. They had a really good IPO in April, and one thing that investors really want is just where can they stash their cash for big earnings, especially as we go to a recession like this. And definitely, I would say that. I guess opinions were super high going into this earnings report for sure.
Yeah, let's talk a little bit about some of the fundamentals of this company. They revised their full year outlook higher. What is driving that?
Well, that's definitely revenue and just their whole recruiting process. That's one thing that CEO Eric Yuan spoke about on the earnings call today. And that seems to be a really big growth driver for them, especially as they continue to see more traction with mid-sized to larger enterprise companies. But that's going to be a thing for Zoom Video to have to figure out is how can they find that their niche in this market as they go up and compete against a Cisco or Microsoft, but still knowing that consumers are using FaceTime and Skype.
You know, despite some of the bearish commentary today, analysts overall remained pretty positive on the long-term outlook for the company. What do you see as those long-term opportunities?
You know, many analysts today spoke about just their across the board being several catalysts. One thing that you have, before we get to the catalysts, one thing that analysts did speak about is just a lofty valuation. And one thing that they will hope that management do is kind of revise their estimates aggressively, so that way their valuations kind of make sense for the catalyst that's coming up.
I have to say, it's one of the few IPOs, frankly, that's managed to do well. Any sense of what's setting this company apart from some of the other botched IPOs we've seen?
I mean, it's the brand in itself. Zoom Video just comes off as cool. It kind of, and that's the thing. They have a problem of, are they marketing to everyday consumers, or is this something that is for enterprise companies? Today, the CEO, Eric Yuan, he kind of spoke about just the freemium model just still working for them. And that was a question that came up on the earnings call, but it seems to be going pretty well for them.
All right, final question here. Who is the competition to take on this cool company?
Well, we have to think about the big players. We have Cisco, we have Microsoft, we have Adobe. And also I would throw in, let's see, I said Microsoft, I would say a RingCentral as well.
Wonderful. Bloomberg's Cameron Leach. Thank you for joining us. Now, T-Mobile is preparing for a crucial battle over its Sprint deal. The fight begins Monday in a federal court in Manhattan. A judge will weigh arguments from a group of states that say he should block T-Mobile's proposed $26.5 billion acquisition. The states say it will raise prices on consumers by eliminating competition in the wireless business. But T-Mobile says by combining with Sprint, it can reduce costs and lower prices. Coming up, we'll get the inside scoop from Huawei as it battles the U.S. government. Our conversation with their Chief Security Officer, Andy Purdy. That's next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. And now to a story we're continuing to follow, Huawei versus the U.S. government. On Wednesday, we reported how the Chinese telecom is suing the U.S. Communications Commission in a fight for greater U.S. market access. On Wednesday, their chief legal officer made Huawei's case to reporters.
Empty claims about national security are dangerous. Politicians in the U.S. say they are very concerned about cybersecurity, and we share these concerns. The fact is, banning a company like Huawei just because we studied in China, this does not solve any cybersecurity challenges.
Joining us now from Washington, Huawei's Chief Security Officer, Andy Purdy. Andy, I have to ask, why spend the time and money suing the FCC when, frankly, the U.S. is such a small market for you guys?
Well, we're really sorry that we had to do it, and it's really disconcerting. They're really good people at the FCC, commissioners and staff, but this action they took is beyond the pale. As we allege in our lawsuit, they've ignored the Constitution, they've ignored the statutes, they've ignored due process under the statutes, and they have not followed their own precedent. We are a rule of law country that we're rightly proud of, but this commission has not acted consistent with the law, so we were forced to take legal action. It's not about our ability to make money in the United States. We want to protect our customers, and we want to help serve over 300 suppliers for which over 40,000 jobs depend.
So you don't think that this has been an outdue distraction from focusing on some of your bigger markets like Europe or Asia?
Well, we're in 170 countries. I've been to 26 countries. I was recently in Moldova, which is a small country in Eastern Europe. There are only 2 million people there. We are about digital inclusion. We're about bringing the benefits of technology to the underserved. Over half the world's population is underserved. That's what we're really about.
You know, you mentioned some of those U.S. suppliers, and some of those did receive the right as well to start selling back to Huawei. Do you feel, in your opinion, that that's a fight that you won in that case?
Well, no, we don't think of it as winning. The fact is, although it's going to be difficult, if we can't buy from those nearly 300 companies, we'll be okay in the long term. Our executives aren't going to lose their jobs. But we think there's a greater likelihood that a lot of Americans are going to lose their jobs. We believe those jobs are really a pawn in the U.S. trade war. And it's really unnecessary, and it's not related to national security that those companies are not allowed to sell to us.
So you'd like to see the Huawei national security issues separate from the trade war?
Well, we believe that the issues related to security, and I was just participated in meetings at the United Nations in New York on Tuesday, where we were talking about what's necessary to promote a safer cyberspace. And it requires a joint responsibility between governments and private companies, between the telecom operators and the equipment vendors. There's sophisticated malicious actors in cyberspace. We have to make sure that we test everybody's products, test the code, hold the companies and the governments accountable to do the right thing. And that's the kind of conversation we'd like to have with the U.S. government, but unfortunately they're not willing to talk with us. At least we could discuss those issues at the United Nations this week.
So what do you say to people who have concerns that Huawei is turning over data to the Beijing government?
Well, the fact is that at least 5 nations in the world have the ability to hack into everybody's technologies and products. So to make America safer, we have to make sure that mechanisms are in place that govern the telecom and mobile operators, the equipment suppliers, regardless of where they do business, regardless of where they're headquartered. So we need to put in, and we're ready to put in place mechanisms to guarantee to the U.S. government that our products are not subject to backdoors from the Chinese government, to guarantee that our employees in the responsibilities they do to service the equipment of the telecom or mobile operators, that they're not doing anything improper. There are guarantees that are proven such as that allow Nokia and Ericsson to do business in the United States despite their deep ties to China, including to some connections, companies owned by the Chinese government. We want to have those discussions. It's not about trusting anybody, about putting mechanisms in place to guarantee that we're safer.
Can you guarantee that they haven't turned over data up until this point over to China?
Well, we can guarantee going forward, and there's a lot of folks forget that the equipment vendors don't own the equipment. We sell the equipment. The telecom and mobile operators have very strict requirements, as they should, and it ought to be part of the discussion to make sure they're tough enough, that the equipment vendors who are hired to update the equipment do so in a way under very controlled supervision of those operators. For example, in the US, we only use specially configured laptops. We need written permission every time we're going to have access. Every keystroke is recorded so that the customer has full transparency on what we access and what we do with it. Those are the kind of guarantees that need to be in place for everybody so that we have a safer cyberspace.
You said that you would like to have discussions with U.S. administrations. Have you had any contact with the administration or other federal agencies, or do you feel like you've been shut out completely?
Well, we've been shut out, and in fact, when you look at the Independent Federal Communications Commission, their rulemaking, they're supposed to hear from the people that are affected. They're supposed to follow their own rules and their own precedents. We want to have conversations with the U.S. government, and if it weren't for the U.S.-China trade talks, I think we'd be having those kinds of conversations. But we're a pawn, and frankly, thousands of American jobs are in the balance, and it's really a shame.
Are you worried that other European nations are considering a ban on a Huawei or a ZTE the way the U.S. is?
Well, the U.S. government's been putting pressure on our allies and countries around the world. And you saw that then Prime Minister Theresa May of the UK and Angela Merkel of Germany, they said the U.S. government has given no evidence of significant cybersecurity wrongdoing by Huawei. What we're encouraged by is what, for example, the European Union is doing with their 5G risk assessment. They want to have mechanisms to have a comprehensive approach to address the most significant risks in cyberspace, using international standards, recognized testing and conformance, independent testing, including code review. That's the kind of thing that's encouraging, and maybe as those efforts progress in Europe, maybe the United States can take some lessons from that so that we can be safer in cyberspace.
A conversation that will indeed continue. Andy Purdy of Huawei, thank you for joining us.
You're welcome.
And coming up, Citi is expecting a strong holiday quarter for Apple, and it's raising its target price for the company. We'll talk to analyst Jim Suva on the move next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg. Apple's price target was raised to $300 from $250 at Citi, which reiterated its buy rating on the iPhone maker and forecast strong results in the company's holiday quarter. Analyst Jim Suva cited the company's, quote, pricing strategies and recent demand trends as factors. And Jim joins us now. So walk me through your thesis why this holiday could be better than last year.
Well, to remind everybody, last Christmas, Apple pre-announced right after January. In fact, it was January 2nd, and it was a negative pre-announcement. The first time since the iPhone even launched, which was over 12 years ago. A remarkable, terrible, disappointing quarter. This quarter, as we do our checks, some of the hottest selling products are actually the wearables, Apple Watch and the AirPods. They are selling extremely well, and we believe people are going to be surprised by the results driven by those items.
I want to talk about Apple's, I think of Porter's 5 forces, right? Their ability to pass on those costs. What is their ability to raise prices on the consumer when it comes to that iPhone?
Great question. I got to tell you, to be honest, when they hit $1,000 for an iPhone, that was kind of the ceiling. And they saw a slowdown once they hit $1,000. Beyond that, the reality is what they're doing is they're packing more and more features into these phones. Things like memory, screen content, capacitors, resistors, all those things typically come lower in price. Instead of making the iPhone cheaper and less expensive, they pack more quality into it so you and consumers can have a better experience. They try to keep their prices generally stable, except, and this is important, The Apple Watch now, the older version, is selling below $200. Teenagers want this left and right, and these lower price items are starting to appeal to the younger generation.
You've mentioned the watch, wearables, services. So I want to come and show a chart that I'm showing in my terminal here at GTV Go, which is the services revenue growth. And Jim, we've seen it decline a little bit. It was growing, but growth has been decelerating. What do you need to see from the company to get that reacceleration of that services revenue growth?
There's two things we're looking at. First, Apple Arcade. This is the studio for me as a parent or you as a parent. You can look at to put in different parameters for your child. Do they want education? Do they want more race car, motorcycle, crash games, violence, and put on some parameters? And over time, they can continue to change those parameters to be more loose. That's different than going out and buying a single subscription to one video game that your child may become bored with in 3 or 6 months. We're looking for Apple Arcade. It was launched in September. Everybody got a free 30-day subscription for free. We'll see how people renew on that. The second thing, Apple TV. A lot of content, a lot of things coming out. So far, they've not been overly successful in it. We're watching this closely, but it's going to be harder to track because when you buy a new iPhone today, you get 1 year of free subscription. So the revenues from that and the uptake really won't come from a year from now. So we are monitoring it. It is important, but it is decelerating, mostly because it's a law of large numbers, above $10 billion a quarter.
I want to talk about tariffs, potentially December 15th. What is the catalyst if tariffs hit on the stock? How much does it fall?
Great question. Tariffs are bad. They're bad for Apple. They're bad for technology. It's basically a tax that the government is then going to put on to the corporations who will likely pass it on to consumers.
Will Apple pass it on to the consumer?
I don't think they will. I think they'll bite the bullet and they will shift some of their production to lower cost areas that don't have tariffs. For example, India. That's going to be the next generation hub. Also, Mexico, Guadalajara, Vietnam. These countries are going to benefit less so than the United States, but they'll benefit.
Will they do that in the next 2 quarters?
They can't do it that fast. Great question, but to employ an entire dorm of workers, thousands of people, you can't do it that fast. But it's not a good thing.
He's been doing it for 20 years, so I could have made this conversation go on for 20 more minutes. That was Citigroup Managing Director Jim Suva. Thank you for joining us.
Thank you.
Coming up, we go over the top tech stories of the week, including that dramatic exit of Alphabet's Larry Page and Sergey Brin, how the company will perform under leadership of Sundar Pichai. That's next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco, and it is time to go over those top tech stories of the week. The company story that gained the most traction, it was Alphabet's staffing shakeup. Sundar Pichai is now chief executive of Apple, as well as Google. That's his co-founders, Larry Page and Sergey Brin, stepped down from the parent company. Investors responded, frankly, by sending shares of the company up about 2% that day. To discuss this and all of the other top tech stories of the week, we're joined by Bloomberg's Sophie Alexander, as well as Bloomberg Technology Senior Executive Editor, Brad Stone. Brad, frankly, every analyst on the street said this is a great thing. They're consolidating. We now have a clear man in charge. What's your take?
Yeah, it's interesting. I mean, first that it's a momentous moment. You know, Larry and Sergey, iconic figures in Silicon Valley. They have been receding from view these past couple of years. Sundar is the guy. He's done a great job with Google. You know, a couple things. One, it does represent, I think, a little bit of the rollback of the Alphabet structure, putting one person in charge. I think the street's reacting the way they did because they think Sundar's going to bring some discipline to those far-off bets. Waymo's doing pretty well, but not a lot to show for the other ones.
And as we transition from the business back to the founder, Sophie, you cover wealth, and it is notable. I spoke with one analyst this week, and he said, frankly, if I was worth $50 billion, I too would just take a leave and maybe hit an island somewhere. You've been following them. What's their story?
Right, so actually $60 billion, and they've seen a little bit of a pay bump as well. In the past few days after the news, the shares rose, last I checked, you know, around 3%, and so that means $1.6 billion for each of the founders. And, you know, that doesn't really mean that much, though, because it's all still held in Alphabet stock. So that's really only going to mean, you know, money that they can spend if they start selling stock, which is what we'll be watching.
Yeah, so we talk about now he's taking over Alphabet and Google. Brad, what will be his biggest task going forward?
Probably to keep his eyes on the ball. I mean, Google still represents 99.9% of Alphabet sales. He's got more responsibility, and yet, you know, the problems at YouTube, you know, keeping advertisers in the Google ecosystem as Amazon and Facebook make headway, those are still Sundar's core concerns. And it's also dealing with a workforce that has felt sort of privileged and empowered to make their voices known, and that's been a little bit, you know, destructive to some of the company's corporate goals, like doing business with the federal government. So I think that remains Sundar's biggest challenge.
You know, Sophie, this sort of brought up the broader question of all of these big tech companies that no longer have their founders. It's sort of been passed on to the second generation. Those founders now all billionaires, and most of them moving on. What do we know about who's gone and who's still left?
Right, yeah, so of course, you know, Apple CEO and Microsoft CEO, neither of them are founders, and now you've got Google. And so it's interesting to watch, from the wealth perspective, it's interesting because obviously these CEOs, they're still paid very well and they still have a substantial amount of stock, but the real money is being in the founder. Those are the billionaires.
Well, when we talk about real money and billionaires, we have to go on to a second story of the week that we are watching. That is all about Tesla and Elon Musk. Brad, we're going to find out perhaps as early as Friday, perhaps next week, if Elon Musk will have to pay for a tweet he fired off. It was disparaging a British cave diver following the rescue of those soccer players in Thailand, I believe it was. What do we know about how the case is going so far?
Actually, the jury's out now and they're deliberating. So continuing with our theme of the travails of wealthy people, you know, Elon is saying, well, maybe he doesn't have the cash for this payout. I think the plaintiff, you know, his lawyer was hypothesizing that damages could go into 100 or 200 million. I mean, you know, Elon's wealth is tied up in SpaceX and Tesla. But, you know, this was two guys insulting each other on Twitter, so it's unclear how the jury's going to come out on it.
And Sophie, let me bring you in here because it was notable, and we had a headline on this, that Elon Musk said, I am worth about $20 billion, but I'm cash poor. Where is his money?
Right, I mean, it's held up in his companies. He's got a substantial amount of stock in Tesla, but the bulk of his wealth is actually in SpaceX. And, you know, it's a private company. It's hard to sell that stock and actually get that cash and that liquidity. So, you know, he is cash poor.
So I have to move on to the third story of the week that we're following, and it's all about Twitter. And this time it's not about the political ads. It's not about anything at the company except for that founder, or the CEO, as we know, Jack Dorsey, sending out a tweet that he might be spending up to 3 to 6 months in Africa. Brad, the timing seems a little suspicious to me.
Well, he was in Africa, and you know he's always been sort of impassioned by the startup community there and the fintech community and the opportunities for crypto in Africa. So he sends this tweet, says he might spend 3 to 6 months next year, and it's worrying investors in Twitter and Jack's other company, Square, because you know he's already running 2 companies. He's the busiest man in the world, and here he is going to be spending 6 months on the road and during an election year. So, but if anybody can pull it off, we should say it's Jack. He's pulled off this 2-company act pretty masterfully so far.
Well, and you brought up that it's an election year, and it was occurring to me, well, at least it's not Facebook, or Google, which is running all political ads without fact checking or running some political ads. At least Twitter is staying out of the game. Does that help relieve some of the concern from investors that at least they're not in that game?
No, because Twitter's already ground zero for this campaign, and as we know, the president's very active, and so he's got a lot of decisions to make and no clear number 2 when these things do cross their plate.
Well, and I want to bring up a story that we have been talking about, and it is from Tesla and Elon Musk. It is beating that defamation lawsuit over that insulting tweet.
Wow.
Brad, I know that this is breaking news for us all. A jury, though, has found in favor of Musk in that defamation suit.
Amazing.
Any early thoughts on this?
It's just that, you know, in the end, what he said was inappropriate, sort of indefensible, but we live in an age where people are saying stuff on Twitter all the time. I haven't seen these headlines, but, you know, Elon's argument carried the day, which is this is something he peeled off. They were insulting each other anyway, and in the end, it didn't really amount to hurting the plaintiff's reputation.
So again, you're hearing it here. Elon Musk is beating that defamation lawsuit over an insulting tweet, and the jury finds in favor of Musk in that defamation lawsuit. We will bring you more headlines as they come. Bloomberg, Sophie Alexander, and Bloomberg Technologies, Brad Stone, thank you both for joining me. Now, coming up for the first time, Uber discloses the number of assaults and deaths on its U.S. system. That is next. This is Bloomberg. Netflix will spend $420 million this year and next to produce more content in India. It's one of the biggest and most crowded markets for the world's largest paid streaming service provider. Netflix is battling with Disney and Amazon Prime for market share in India. The companies are offering relatively cheaper packages to lure paying subscribers. It's something different in a country used to free YouTube videos. And Uber found more than 3,000 claims of sexual assault in the U.S. last year. The ride-hailing company reported Thursday, publishing for the first time the volume of deaths and misconduct on its system. To learn what this means for Uber, I want to bring in Tom White, senior research analyst with D.A. Davidson. D.A. Davidson makes the market in both Uber as well as Lyft. Tom, thank you for joining us. What did this report mean for you and the fundamentals of the company today?
Well, look, I think kind of the longer-term implications are, it'll take a little time for us to really understand exactly how this might impact Uber's brand, Uber's positioning relative to Lyft, which in Lyft's case, I think maybe they've done a little bit better job at sort of shining a light on issues like this, maybe presenting themselves as more of sort of a socially conscious brand. But look, I think it was very smart for Uber to do this. Not only morally the correct thing to do, but also probably good for business as well. I think shining a very bright light on issues like these, it may impact the stock sort of in the near term, or it won't do much to help sentiment perhaps, but is probably good for the business over the long term.
Is safety some of the biggest overhangs on the stock right now?
I don't know that I would say that it's one of the biggest overhangs. I think broadly speaking, how regulators view and look to regulate these businesses is arguably maybe the biggest issue kind of overhanging the ride-sharing stocks at the moment, and safety sort of falls into that. Uber and Lyft grew so quickly and basically created these very large businesses before regulators could kind of keep pace in terms of how to oversee them, how to regulate them, how to legislate them. You're seeing that, I think, in some of these statistics that maybe the regulators weren't able to keep pace in terms of keeping track of what kind of drivers were necessarily getting involved with the platforms. And regulators are starting to finally catch up. We saw that recently in London, which has basically told Uber that they're not interested in renewing their license to operate there. Uber's renewing that, appealing that decision, excuse me. I think this sort of just catch up on the part of regulators is one of the main issues that Uber and Lyft are facing.
And Tom, of course, we want drivers and passengers alike to feel very safe in an Uber or a Lyft ride. But also in that paper, Uber talked about over 1 billion rides were taken. Has it yet impacted the fundamentals? Have you seen a drop off in ridership, or are you confident that those fundamentals of the company are still very much intact?
Yeah, look, I mean, relative to the total amount of rides, we're talking about a very, 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 very infinitesimal percentage, effectively, of rides where one of these incidents happened. We don't really have comparable data for other modes of transportation like taxis, so it's hard to kind of in isolation really kind of understand exactly what these numbers mean. Uber gave us 2 years worth of data. It's worth pointing out that the absolute number of incidences, assaults, increased 2018 versus 2017, but the rate of assaults actually declined. So trends are happening in the right direction. I think generally speaking, Uber and Lyft should still be considered really quite safe ways to get from point A to point B. And we'll continue to monitor these statistics to see if they can continue to make progress, making them even safer than they are.
Tom, I want to push this story about Uber into 2020. You mentioned that Uber is appealing the decision from the London Transportation Authority over there, which tried to ban them. How much of an overhang is that, or how worried are you about that?
About the London issue specifically, look, I think it's worrying. I mean, in the near term, Uber, while they're appealing, can continue to operate status quo. So we don't expect any impact to their financial performance over the next several months. I mean, conceivably, this appeals process could go on for, several quarters, perhaps even longer than a year. We do think London's a big market. We think it's probably one of the top 5 largest markets for Uber globally. So if they were unable to operate there, it would certainly cause folks to kind of reduce their estimates. That said, I don't think there are many large municipalities or large cities out there that really want to attract attention or gain a reputation for stamping down innovation. For any large city globally, being a place where technology companies are able to kind of operate and scale and employ constituents is an important consideration. So I presume that over the course of the appeals process, Uber is going to be working, I'd say double time, but they were working double time when this process flared up with London a year or so ago. They'll probably be working triple time to make sure that they really address all of the hot button issues for the regulators in London, and they'll probably come to some sort of solution that enables Uber to continue to operate there.
Well, we talk about more regulation, and here in California, we're facing AB5, which could go into effect in January. Any idea if Uber has to treat those drivers as full employees instead of contractors? What impact does that have on the stock?
Well, it's at a minimum, regardless of its AB5 as it's written now being enforced or some sort of middle ground version of the legislation being agreed to by the legislators in California and the ride-sharing companies and the gig economy companies that are negotiating with them. I do think costs and expenses will rise for the ride-sharing companies. And I do think that the two sides will hash out some sort of agreement that incorporates some elements of AB5, but enables the gig economy companies to sort of pool some of the risk or pool some of the added expenses. But net costs are set to increase by potentially as much as 25%-ish, depending on kind of what version of this legislation goes in. And I think what you're going to see is companies like Uber and Lyft effectively pass all or the vast majority of those cost increases onto consumers in the form of higher prices. And the big question there is whether or not that will impact the attractiveness of ride sharing for consumers. Will it reduce the number of use cases where it makes sense to take an Uber versus walking or taking the bus or something like that? And so very important issues, really speaks to kind of how big the addressable market and for these types of companies and how transformative they ultimately could be, and so something to watch. And rider classification, is only one area where ride-sharing companies are facing, I think, potential cost increasing type catalysts as well. We heard recently in India that they're evaluating commission caps on ride-sharing companies. That's another way that costs, could effectively increase for the ride-sharing companies. You've got surcharges in places like New York now, where the minute you get into an Uber or Lyft, the city's adding a small surcharge. So, a series of different challenges.
We are well aware of those. D.A. Davidson's Tom White, thank you for joining us.
Thank you.
Stealing tens of millions of dollars from financial institutions worldwide, 2 Russians are charged with cyber theft by the U.S. government. U.S. and British authorities are accusing a Russian group called Evil Corp of, quote, some of the worst fraud schemes of the past decade. Joining us to discuss Bloomberg's Eliza Sebenius. Eliza, what is the Evil Corp?
The Evil Corp is a group of hacking criminals. We're watching them closely this week as the U.S. government, both the Department of Justice and the U.S. Treasury, unveiled sanctions and charges against them. But essentially what they've done is they've used malware known as Drydex to hack in and steal tens of millions of dollars from banking and financial institutions around the world. They've targeted dozens of countries, and these sanctions and charges that the U.S. reveals suggests that the U.S. is focusing on them and trying to do some kind of deterrent to prevent this malware from continuing to spread.
What will be the effect of the sanctions imposed this week?
So researchers say that, sanctions are a good thing. They call out the hackers. They limit their ability to travel. But of course, there has to be real consequences on these kinds of hackers who are conducting theft at these big scales, researchers say. So it's a good start, but it doesn't finish the job of bringing these hackers to justice, according to many of the experts who are studying this.
Do they have clear ties to the Russian government?
So the alleged leader of Evil Corp also worked for the Russian intelligence service, according to the Department of Justice. And what researchers say is that there's a fairly common trend where hackers who work in these criminal groups are also tied to nation-state governments. So this follows a pattern of ties between criminal activity and government activity in cyberspace.
I want to talk about some of the other Russian-style tactics that we heard about this week. There was a disinformation campaign in the UK that was ahead of their election. What else do we know about that?
So what's fascinating here is that a cybersecurity firm discovered that the disinformation campaign that occurred in the UK ahead of the election very much resembles a tactic that Russia is accused of using as it spread disinformation elsewhere. So these researchers are tying the spread of what are leaked trade documents in the UK and their amplification on the internet to other tactics we've seen from Russia. And why that's especially interesting to people that are studying cybersecurity and looking at elections is everybody is on alert, trying to see, what is Russia going to do ahead of the 2020 elections in the US. And seeing what they're doing or what tactics are being used in the UK ahead of the election gives us some indication, according to the researchers who published this finding.
Bloomberg's Eliza Sibenius, thank you for joining us. And coming up, the robots are coming for the bank's highest paying jobs. We'll have details next. This is Bloomberg. Robots in finance could wipe out some of the highest paying jobs. So says an expert in machine learning. With all the details, it is Bloomberg's Linan Nguyen. Linan, I just have to wonder, how many jobs have been cut so far? How big of a deal is this?
Well, Taylor, in testimony to the House Financial Services Committee today, a Cornell professor actually said that it's been tens of thousands of jobs that have been cut around the world for execution traders. So those are the traders that kind of, plug in the trade on a system and execute it. So that's a lot of people. And on top of that, he says that the jobs that are really under threat are the ones for people who are, say, modeling portfolios, modeling risk, and also doing roles like, some of the more basic tasks on Wall Street. But this is eventually going to go up the chain to more complex tasks as well.
It was notable here that lawmakers were also asking about racial and gender bias going on in AI. What were experts saying about that?
Well, the experts were saying that we have to be very cautious, especially in the early days of using AI within financial systems. And so what they said was that AI can encode our current biases, and it can encode biases around race and gender into systems, but it can also be used as a tool to counteract biases and to kind of make systems more fair. So it's really important for lawmakers and for financial companies to think about that early on before they start to bake all of these AI systems into their workflow.
You mentioned lawmakers. How do regulators and lawmakers respond to this?
Well, it's interesting because more broadly, we looked at the presenters to the House Financial Services Committee talked about the fact that jobs in the next 10 years are going to change dramatically. I know you're a CFA member, and the CFA Institute actually said that 43% of its members expect their jobs to be significantly different in the years ahead. And a lot of the people who are going to be kind of made obsolete by this include sales agents, traders, and performance analysts within financial markets. So when it comes to regulators, that's really, really important to think about how those jobs, first of all, aren't going to be around anymore. And it's also going to be very important for regulators to be able to keep up with these markets. It's like a needle in a haystack, and the markets are getting more complex and more data-driven. So that means that haystack gets bigger, and the regulators who need to kind of manage and police conduct in these markets have a much harder job.
And how has this changed? Because we long know that computers have been doing electronic trading, that quant traders have been writing code and using robots or quants, if you will. How is this now different from that or takes us to the next level?
I think where it's different is that most of what we hear is about the functions that are really simplistic, like the back office sort of being taken into AI. And so those functions are the ones that we know are most likely to be automated. But the thing that's interesting about this professor's studies is that he's saying actually even some of the higher level expert level tasks can actually be generated and done based on AI. You don't need one expert trader. You might need a bunch of coders who don't really know financial markets to just tackle a really tough or thorny problem, and then that trader goes away.
Thank you to Bloomberg's Linan Nguyen. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.